Hello, everyone. I'm excited to welcome you back to our weekend series dedicated to price action based technical analysis. In this episode, we will be taking a closer look at the GBPUSD market structure, which has seen a boost in trajectory due to the Fed's pivot and a hawkish statement from the Bank of England. Our recent trading setup presented remarkable opportunities. In fact, following a choppy and volatile midweek, we were able to capitalize on the bullish momentum, securing over 600 pips from multiple buy entries during the course of the week. Congratulations to all of you who joined in on this profitable journey. And if you in any way missed out on these commentaries and wish to catch up for educational purposes, you can find the link in the description box below or at the top right hand corner of your screen if you are watching on my YouTube channel. With positive developments in the United Kingdom's business activities and hawkish stance from the New York Fed President John Williams, we are set for a week laced by high impactful economic features from both economies. The burning question at this juncture is, how will the pound sterling navigate these waters? Stay with me as we unravel the potential trajectory of price action for the upcoming week, employing fundamental tools such as trend lines, key levels, and chart patterns to guide our analysis. But before we proceed, I want to emphasize that this video is for educational purposes only and should not be considered financial advice. My aim is to provide insight into the GBPUSD chart, enhancing your understanding of price action analysis. Remember, Forex trading carries inherent risks, so always exercise caution and consider consulting a professional financial advisor before making any investment decisions. So without further ado, let's delve into the details. As we shift to the daily time frame, the structural analysis from last week appeared to have transitioned into a crucial area in this market that has been characterized by selling pressure. If you look at the structure here, I was able to take into consideration the nature of price action since the month of June, and the first thing I was able to observe is that price action is back into an area which has been known for selling pressure since the month of June, as you will see here, though we had price break out the structure, of course, in the month of July, leading to the new high we had on this asset for in recent times. Then we saw price action drop back down into this area after a month. As you will see, continued selling pressure persists below the 1.2800 level, as you will see here, and since then price action has been trading below the structure. In recent times, that is the last trading day of the month of November, stroke the early days of the month of December, we saw an attempt again by the buyers to break out of that structure. Interestingly, last week we saw a strong bullish attempt to break out of the structure, but immediately price action tested that area, we saw some selling pressure resume around that area. Now the question going into the new week is, will price action respect the supply zone around this area to incite another wave of bearish momentum to the downside, maybe into this ascending trend line to incite an uptrend, or probably go to as far as that psychological level at the 1.25 area to incite an uptrend continuation? Or are we going to be seeing price action climb back above the structure where the appearance of buy pressure could incite a breakout of the 1.28 area for the first time in the last 3 to 4 months? Now, to answer this question, I was able to identify a simple setup on the 4 hours time frame, which we will be using to navigate our path within this crucial zone. on this chart. But before we go into the details on the lower time frame, it is very, very important for us to keep tabs with the fundamental factors that will be affecting the market sentiment for this week. And of course, you know that by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, on the economic calendar and based on these assets we're monitoring for this week, we shall be focusing on both the United States and the United Kingdom economic dockets. Now, for this week, the first high impactful event is coming in from the United Kingdom, and that is on Wednesday, December 20th. And on this day, we look out for the CPI data, that is the Consumer Price Index, which is a publication that measures, or let me say that examines the average change in prices paid by consumers for goods and services over time. Now, an higher than expected CPI can lead to concerns about inflation, hereby impacting the market sentiment as well. Now, fast forward to Thursday, December 21, we look forward to the gross domestic product annualized for Q3 from the United States. And this, for those who don't know, this is a key economic indicator representing the annualized percentage change in the U.S. economic performance, representing the total value of all goods and services produced within its borders. Then fast forward to Friday, we are also going to be witnessing the GDP data for Q3 from the United Kingdom economic docket as well. Then finally on Friday, we shall be anticipating the core PCE, known as the Personal Consumption Expenditure Price Index, which measures the average change over time in the prices paid by consumers for goods and services, excluding volatile foods and energy components. Now, you can see that this week is jam-packed with a series of high impactful events, and of course, the anticipation of this event will definitely affect the market sentiment and dovetail to a reflection on the chart as price action. Now, talking about price action, we shall be scaling back down into the 4 hours time frame, where I was able to identify a simple setup that we will be using to guide our decisions for this week. And what I did here on the 4 hours time frame was to take into consideration the nature of price action since the month of November. And this was what I was able to come up with. The first thing here is the fact that price action has been very, very bullish in the last 1 month. And in fact, we have a couple of ascending trend lines that to emphasize the strength of the buyers here. So I have a temporary trend line right here where the major one is sitting at this corner right here. But the most important one at this juncture is the temporary one, which is quite closer to where price action is at this point. Now, in addition to this ascending trend line was this beautiful psychological level at the 1.2500 area, which I will be using as my demand zone. And in fact, if you look at the structure, you can see that this level had played a major role in determining the direction of price action since the month of November. Look at what happened here. It was initially a selling niche before this level was broken to the upside, as you will see here, and since then price action had continued to trade above the 1.25 area, further emphasizing the strength of the buyers in this particular market. And last week Wednesday, we saw the beginning of another wave of bullish momentum leading into the breakout of this descending trend line to further give us a setup to guide our trading decisions for this week. Now, with this Interesting setup we finally found on this chart. How are we going to be positioning ourselves for the next week? Now, with the way price has broken out of this descending trend line, I'm of the opinion that the recent bearish momentum, which could be characterized by profit-taking activities in this market, may be the beginning of a retracement of that impulsive leg that broke out of that descending trend line. Now, bringing out our Fibonacci retracement tool to project where this retracement phase might end before another wave of bullish momentum will happen. So what I did here was to capture the previous impulse leg with my Fibonacci retracement tool and then target that area around our golden zone level, which is between the 50 and the 78.6% of that impulsive leg. Now, if you do that correctly, you will see that we have an area around the 1.265 and the 1.25500 area to look out for buying opportunities. If you look at the structure, you will see that that zone we just identified shares a beautiful confluence with that ascending trend line. So we are going to be looking forward to see how far will this bearish momentum go. Will it get to the 1.26 area or anywhere around here, where we will look out for reversal patterns or buy pressure to give us signs of joining an uptrend continuation? Or will price action break down the 1.26 level, retest the ascending trend line as well to incite a move back into the demand zone, which interestingly shares a beautiful confluence with that ascending trend line, the major one we identified earlier, after which, depending on how price action reacts to that zone, will determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. So that is how we shall be looking out for opportunities going into the new week. Or are we going to be seeing a situation where price will continue to the upside in such a way that buy pressure resumes, breakout retest of our key level that will lead to the breakout of the 1.28 to look out for buying opportunities? So we are at a very crucial juncture in this market right now, as I will want to see how the market participant will be reacting to this key level at the beginning of the week to determine what our next line of action will be. Are we going to be seeing a retest of the key level before price drops to the downside, or is price going to be breaking out of the key level to push price to the upside? Join me on Monday morning as we take a dip into this chart to see what our next line of action will be after monitoring how participants in the market will be reacting to the structure during the early hours of the new week. If you in any way have found this content helpful and useful in making your own independent trading decisions for this week, kindly support this project by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.